Hello, friends. This is Srikant here. Welcome to my channel. So, I will be making a series of videos explaining about the basics of the Indian stock market, which will be in a very easy to understand language, even for beginners and the general public to know the concepts behind the workings of the stock market. And this is going to be a general series of informational videos, and I hope this might be informative for you. And if you find it helpful, I would request you to subscribe to my channel. And so, without further ado, uh, I'm going to get into the subject. And before I begin, I would like to say that I'm not a big fan of long and lengthy videos, and I would try my best to keep my videos as short as possible. So, before we begin, it's important to understand the types of companies in India. So, majorly, there are several different types of companies, like one-person company, firm, proprietor firm, and stuff. So, we are concerned here for the purpose of this education video. We are concerned only with two types of companies, which is a private limited company and a limited company. So, usually, when a company starts, it does not go to the stock market directly. No, it is not allowed. Actually, the company needs to be in existence for several years to apply to get listed on the stock exchange, right? So, any company in India starts its journey as a private limited company. So now I will take you through a simple process of a private limited company planning to go public, right? So let's say there are two friends, Ram and Sham, and they decide to do a business of selling peanuts, right? And they register the company as Ram and Sham Private Limited. So they start that company and they open a lot of branches across India, across all metros, and they they find some success in it, right? So initially, and they name the chain of stores as Peanut Haven, okay? And the company name is R&S Private Limited, and their product, I mean, is the chain of stores Peanut Heaven. Now, while starting this company, Ram has brought in 50 lakhs Indian rupees, and Sham has brought 50 lakh rupees with him. And they've invested that money, and then they started these stores. They've employed people to take care of their stores, and they bought raw material, machinery, and furniture in each store. So now they have like 10 stores across India, and they've done all of their setup, and the business is running fine. And in the first year of their operation, they made a profit of 10 lakhs. Yeah. And in the second year, they made a profit of 20 lakh rupees. And in the third year, they made a profit of 30 lakh rupees. Now, the both sit together and, while discussing about their business, they plan on why don't we expand to tier two towns and villages in India to capture more business. But there is a big problem here. They don't have the required capital to open new stores and new branches, to hire more staff and all that. They need 1 crore to do that. Now, they have two options here. They can either go for a bank loan, right? Now, that's a very tedious process if they have to do it. Now, they would have to present a business plan to the bankers, and the bank has to be convinced and all that. And the bank would ask for a hefty collateral or guarantee for the loan to be sanctioned. So that's if they choose that first option. Now, secondly, what they can do is they can go for something called the initial public offer, right? Now, IPO, you might have heard this buzzword a lot these days, right? This is the process where a company decides to list its shares on the stock exchange, either it be NSE or BSE, right? So, what are the advantages of a company going public? Immediate advantage or benefit is that the company gets new capital, right, into their balance sheet, which they can use as working capital to expand their business, right? So, who would buy these shares, right? It's mostly the general public, and there are institutions and high net worth individuals who sense that this business can become so big someday, and the shares might value of their shares might, you know, increase so much that they can make a lot of profit. So it's like a win-win thing for both parties. So the company then decides to go, how much capital do they need? They need 1 crore. And they consult a professional chartered accountant or an investment bank, which will help them through the process. Now, as I said, originally Ram and Sham both put together have contributed 50 lakhs each to this company, right? Now, they are going to need 1 crore more to expand the business, which they foresee. For that, they would divide the number of shares of the company. I mean, don't go by this. This is just a rough calculation I've made to make it easy for you to understand. I mean, in terms of calculations, right? So they have split the company into 20 lakh shares. Okay, and the 20 lakh shares value would be 2 crores. So each share value is rupees 10, right? Now, there is a long and tedious process for a company to go public. They need to file their financials, the last several years' financials, audited financial reports with the Securities and Exchange Board of India, which I'll get to later. And then they would also have to file a red herring prospectus to show the ownership of that company and to show them where, I mean, basically, it's like showing everything about their company to the Securities and Exchange Board of India. And once the company is scrutinized by the market regulator, that's when they get an approval to go public. Then they do a roadshow and they promote the company name to, get the investors to be interested in the company. And then what they do is they put up 10 lakh shares for sale, right? Now, the general public may have seen their chain of stores, Peanut Heaven, uh, at many locations in many cities. They might think that, oh, okay, this business looks good. It has its presence in many cities and it looks to take off any moment and might make big profits. So the public go ahead and invest in this IPO, and the public ends up buying 10 lakh shares of this company. So the public would pump in 1 crore rupees. Where would that 1 crore rupees go? Those 1 crore rupees would go to the company in the company's balance sheet. So now the company owners or promoters, as they're called, Ram and Sham, have access to that 1 crore rupees capital now. And they can use that 1 crore rupees to expand their business and open new set of branches and hire more staff and to grow their business. So once this is done, the company shares get listed on the stock exchange. All right. So once the company shares are listed on the stock exchange, the public who have invested 10 lakh shares, maybe like a 1 lakh people may have bought uh, 10,000 shares each. And once the company shares price goes up, it lists at 10 rupees. Let's say it lists at 10 rupees. And if the company shares go up to 20 rupees, and that's when the public needs to sell those shares to make a profit, right? So the exchange is the place where the common public, like me, you, or anyone who had bought these shares, they can log into their trading account and then they can execute the sale order and they can make the profit of 20 rupees or whatever the price the share is being traded at that time. All right. Well, uh, as this is my first video, I hope I have put it in a very simple manner for a beginner to understand the process of stock market or a stock exchange and the process of how a company would go public and why it needs to go public. So in my next video, I will go into the details of the valuation of a company, what uh, and what the safeguards available for the investors and the market, especially the market regulator, SEBI, which is the Securities and Exchange Board of India, the stock exchanges and the indices on the stock exchange, and also some terminologies like the company's book value, face value, and the market value of a particular company. We'll go through examples and we'll also go through shareholding patterns of companies. So I'm going to cover those in the following episodes of this series of videos on stock market basics. See you then. Bye. Oh yeah, and if you have any questions, please feel free to drop your comments, and I will answer every question you might have. Thank you.